Stocks up big for the day. The S&P 500 up 1.61%. The NASDAQ 100 up 2.31%. 20-year bonds down, gold down. Let's jump first, as we always do, into the weekly chart on the S&P 500, as represented by SPY, the Spider S&P 500 Exchange Traded Fund. It is an index fund. It tracks the S&P 500, and we see on our Heikin-Ashi candlestick, average pace still heading down. Price percent oscillator going down, not at the same angle it had been in the prior week ending the 23rd. That was a shortened trading day after the Thanksgiving holiday. But so far, we see down movement, price below the weekly trend line. And of course, we've got the S&P 500 losing downward momentum on the on the derivative oscillator. Price percent oscillator, like we said, still heading down. We go to the 2-day chart. What do we see there? Well, on the 2-day chart, we actually see the movement going down still. We see the derivative oscillator, however, less than flat, actually heading up. The price percent oscillator is heading up. Derivative oscillator losing downward momentum. Let's get that straight. We see the 2-day chart price movements just below that, and of course well below the weekly. We go from the 2-day to the 4-hour chart, and that is where we see the up movement. And again, remember, we're using Heikin-Ashi candlesticks. They are different than your typical candlestick. Want to know more about them? Great training at the website. Under Trainings, Heikin-Ashi candlesticks. You can find it also at the YouTube channel. And we see where the market bottomed out there on Friday and then moved up in the morning on Monday and again Monday afternoon. Derivative oscillator lost lots of downward momentum both in the morning and the afternoon, and the price percent oscillator is heading up. Hasn't crossed over yet, but is heading up, has pushed through the 2-day trend line. We go back to the weekly. We go from the S&P 500 to QQQ. And what do we see there? Well, we see on QQQ, we see the derivative oscillator losing downward momentum. The price percent oscillator still heading down. And of course, we look at the weekly candle. It is starting off as a red down candle on the weekly chart, meaning average pace is still down. Price movements below that weekly trend line. We go from the weekly to the 2-day, and we continue to see down movement on that 2-day chart. Derivative oscillators gaining downward momentum. Price percent oscillator is a little flat at this point, and we see so far that price movement on the first day of this latest 2-day candle is a green up candle pushing through the 2-day trend line, still below the weekly. So again, some warning bells for those who have been tracking that down movement. We do want to be careful what we watch there and make sure that everything is making total sense for us as we see things backing off. We go to the 4-hour chart, and of course we had a crossover at the end of the day. Remember, like we said, the Q's up 2.31%. Strong up movement in the morning, pushing through the 2-day trend line, and even more in the afternoon. Again, flipping over both the derivative oscillator and the price percent oscillator. Typically, when those flip at the same time, means you're going to see more of that move. But all things being equal, the market does tend to move in the direction of the largest chart. But that is some strong, strong up movement as we start the week off. But remember, it is typically that big chart that controls the direction. The trend is your friend until the end. So again, keep your eye on the prize and be careful not to hang into any down trades too long, particularly with that 4-hour chart on the Qs crossing over, going up. Strong, strong up movement for the day. Now let's go from the stocks into 20-year bonds. Now, we look at the weekly chart. Bonds were down a little bit for the day, 0.23%. Price percent oscillator has started the week off crossing over, well, not crossing over, getting very close to crossing over. Derivative oscillator did cross over, have a red open box candle after 2 prior weeks of decent up movement. And of course, the weekly is still in a confirmed down move until we have a crossover on the price percent oscillator. That's one of our rules. We look at the 2-day chart. What do we see there? Well, it crossed over going up back on the 12th and has pretty much been a fairly solid line of strong up movement. Price still above that 2-day trend line. Derivative oscillator gaining momentum. Price percent oscillator heading up. We go from the 2-day chart to the 4-hour. What do we see there? Well, down movement in the morning, bit of a pullback in the opposite direction in the afternoon. Didn't push through the 2-day trend line, but is getting very close to crossing over. Derivative oscillators already flipped over to negative, so keep your eye on things there. Remember, we want to see the price percent oscillators, well, on the weekly chart crossing over in the same direction as the 2-day for there to be some type of trend and jumping in point in an up move. If, however, down movement's strong enough and rotates what's now an up move on the 2-day chart to a down move, then of course we can be set up to move in the direction of the weekly chart. So keep your eye on things. We don't have a move at this time, but we'll keep watching. Okay, so we go from the 4-hour chart back to the weekly chart, and we head to gold. What is gold up to? Well, gold crossed over going up back on the 12th of October, went up for 2 following weeks, and has really been sliding sideways, was heading down until the 16th, up over, that's the week ending the 16th, up over the week ending the 23rd of November. And so far this week, somewhat down. Again, the weekly still in a confirmed up move. And we see the derivative oscillator losing upward momentum, but that price percent oscillator still heading up even with a down day on Monday. That 2-day chart, again, we told you about this on Friday. Pay attention to how the week starts because we had a week crossover at the end of the week on the 2-day chart. And it may, if there's more down movement when this candle ends up being drawn, it may bounce off the red signal line and head down again. Derivative oscillator still losing downward momentum. Price percent oscillators pretty much laminated on the red signal line. So keep your eye on things. If things rotate back over, going down on the 2-day, maybe that will portend a change in the weekly at some point. We don't have a trade at this point, but we'll continue to watch and see how things go on gold on Tuesday and how that 2-day candle ends up. You can see that things on gold really peaked out back in the morning on the 21st, Wednesday, and then have really been sliding sort of sideways, tending down since then. Derivative oscillators losing upward momentum. Price percent oscillator heading down too. So keep an eye on things. Keep your eye again on the S&P 500 as to how things go on Tuesday. If this strong up move is going to continue, same for the Qs. Just let's see how TLT shakes out, and the same with gold. That's where we are, folks, as we end the day on Monday and go into Tuesday, the 27th of November. Hope that you had a great Thanksgiving and you're primed and ready to charge on through the end of the year. Practice trading, learning every day, filling out your daily market worksheets, your weekly market worksheets, and every time you do a practice trade, your trade worksheet. All those are available for free as PDFs in the show notes. And you want to get the notes and the shows every day, go to chartingwealth.com and subscribe. You want to purchase our book, that would be great. And if you want to support us on Patreon, we've got links there too in the show notes to all these things. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.